Are you preparing yourself for the retirement risk zone? If you are, your money may have a very good chance of lasting your entire lifetime. But if you don't know anything about the retirement risk zone, it could be a different story. Here's what you should know from a leading expert in this field, Dr. Moshe Milevsky, to help make sure your hard-earned investments won't run out. Dr. Milevsky, what is the retirement risk zone, and why is it important to Canadian investors?
The retirement risk zone attempts to describe the time period before retirement and within 5 or 10 years after retirement where a loss in the stock market or a fall in the value of their investments can have a disproportionate effect on the amount of income that they can withdraw in retirement. It's a risk zone. It's one of the risks that people face in retirement, and they have to manage that risk. I think that as boomers approach the retirement risk zone, they have to start thinking of not just their asset allocation, but their product allocation as well. The concept of product allocation is to think about more than stocks and bonds in your portfolio. It's about adding protection and creating income for the rest of your life.
Why is the sequence of returns important? And what is the impact of that on retirement?
The concept of sequence of returns tries to capture the counterintuitive effect of investment returns when you're withdrawing money versus when you are accumulating money. When you're saving money for retirement, whether your dollar earns 5% this year and then 10%, or 10% this year and then 5%, won't make a difference on how much is accumulated. But when you're withdrawing money, the sequence of returns will have an enormous impact on how long the money will last.
With all the uncertainty of the future, I want to know our money will last as long as we will.
Dr. Milevsky, where are Canadians lacking our greatest knowledge with investing?
I think that the biggest gap in knowledge for Canadians right now is the risk management part of retirement income planning. Canadians face uncertainty, risk about how their investments are going to perform, especially when they start retiring. They face risk about inflation, what things are going to cost in 20 or 30 years. They face risk in terms of how long they're going to need income for. They require a risk management approach, and I think that Canadians should strengthen their knowledge of risk management.
We hear that a guaranteed minimum withdrawal benefit, or GMWB, is an option that can provide protection against market downturns, yet still provide growth potential while providing monthly retirement income. Can you tell us about the GMWB?
GMWB stands for Guaranteed Minimum Withdrawal Benefit. And these products, or these riders, have become very popular in Japan and in the US within the last 5 years because the population there, demographically, is slightly older than they are here, and they have transitioned to income already. And during the period of retirement, when you are withdrawing money, a GMWB can help to protect income for the rest of your life.